Hey guys, how we doing today? Today, I want to talk about something that I never really knew too much about until just a couple weeks ago, to be honest with you. And that's going to be exactly how inflation affects the stock market. So, I'm hearing so many different things about with the inflation going up. Stock prices are going to keep going down, they're going to keep driving down. But why? Nobody really explains the reason why, and it just never really made sense to me how inflation could drop stocks in any way. So today we're going to get into that. We're going to break that down, and by the end of the video, you guys are going to know exactly why inflation affects stock prices, and more particularly why they affect them negatively. So let's hop into the video. Investors, the Federal Reserve, and businesses continuously monitor and worry about the level of inflation. Inflation is the rise in price of goods and services, and this reduces the purchasing power each unit of currency can buy. Rising inflation has an insidious effect. Input prices are higher, consumers can purchase fewer goods, revenue and profits decline, and the economy slows for a time until a measure of economic equilibrium is reached. A rise in inflation is something that causes all consumers to feel the unexpected pinch when goods and services cost more. However, businesses and consumers eventually become acclimated to the new pricing environment. These consumers become less likely to hold cash because the value over time decreases with inflation. High inflation can be good as it can stimulate some job growth, but high inflation can also impact corporate profits through higher input costs. This causes corporations to worry about the future and stop hiring, reducing the standard of living of individuals, especially those on fixed incomes. This is why rather low value jobs continue to hire, since people will seemingly always buy Starbucks and McDonald's no matter the price. But higher paying jobs within the actual corporation seem to disappear since those jobs cost more to create. Since when inflation increases, purchasing power declines, and each dollar could buy fewer goods and services. For investors interested in income generating stocks or stocks that pay dividends, the impact of high inflation makes these stocks less attractive than during low inflation, since dividends tend to not keep up with inflation levels. In addition to lowering purchasing power, the taxation on dividends causes a double negative effect. Despite not keeping up with inflation and taxation levels, dividend yielding stocks do provide a partial hedge against inflation. Similar to the way interest rates impact the price of bonds, when rates rise, the bonds prices fall. Dividend paying stocks are affected by inflation. When inflation is on an upswing, income stock prices generally decline. So owning dividend paying stocks in times of increasing inflation usually means the stock prices will decrease. But investors looking to take positions in dividend yielding stocks are allowed to buy them cheap when inflation is rising, providing attractive entry points. This is why long-term holding and buying when others are scared are so important. Investors will always try to anticipate the factors that impact portfolio performance and make decisions based on their expectations. Inflation is one of those factors that affect the portfolio. In theory, stocks should provide some hedge against inflation because the company's revenues and profits should grow at the same rate as inflation after a period of adjustment. However, inflation's varying impact on stocks confuses the decision to trade positions already held or to take new positions. In the U.S. market, the historical proof is noisy, but it does show a correlation to high inflation and lower returns for the overall market in periods. So, I really hope you guys enjoyed this short video about inflation and exactly how it affects the market. Pretty much, everyone's going to have so much less purchasing power because the prices of everything is going up. Go to your local grocery store, you'll realize chicken is so much more expensive, produce is so much more expensive, and where we're at right now with the bottleneck in our supply chain, we're not even getting most of these things, so they're going to charge us a premium just because of that. So be mindful of these things and understand that if you do have cash on hand right now and you can get a discount on the stock, then as long as you can buy it, as long as you don't need that money, still stick to the rule that everything invested in the stock market is things that will be eventually burned in a fire because you don't have that money no more. Then you'll be all good. But for the most common folk, they're not going to have just extra income laying around these next few months to, maybe a few years, just because of the high inflation going on and people having to get acclimated to it. But once again, we definitely will get acclimated to it, and these new prices will just become the new price. I've been hearing a lot of chatter as of recent about this being a direct cause of the fall of stocks, but I just had no idea why inflation was that. This is the main reason why I make these videos. We all need to learn this and how it moves our money behind our backs. Let me know what your most recently invested stock is down below, and I'll catch y'all on the next one. Thank you.